Good afternoon. I'm Gordon Malcolm, Director of Financial Services in EMEA for TigerGraph. And today I'd like to discuss graph analytics in financial services. So let's get started with what the analysts are saying about the graph space. Well, Gartner singled out graph analysis as the most effective competitive differentiator for those organizations pursuing a more data-driven approach. IDC recognized the valuable insights that come from finding links between integrated data. Markets currently estimate that roughly 20% of organizations are taking advantage of graph, and with 100% year-on-year growth, that will rise to 80% by 2024. So this is very much an established trend, particularly in financial services. So those that aren't embracing graph now or soon might find themselves arriving a little late to the party. Forrester say the graph is the fastest way to connect data as complexity grows. And data management have graph databases as a top 5 technology trend. So let's look at a little bit more detail into what Gartner think. Well, no, they have graph analytics, not graph databases, as a top technology trend. And it's the only one that's foundational to the remaining 9 trends. And this makes sense to me. Data science, artificial intelligence, and machine learning have really advanced recently. And they're doing so against a landscape of much larger volumes of data and more varied data sets. And if we look at the decade of 2010 to 2020, it's all about capturing the data. It could be external sources, siloed, and we all have these big lakes and swamps of data. And I really think this decade is about finding meaningful insights and connecting that data to provide actionable intelligence to meet the complex demands of the business. So what do they think of relational databases? Well, in terms of complex queries, relational databases, first of all, are great, and they tackle most problems within an organization. What they don't do well or claim to do well is manage and store relationships to find links and connections within the data. It's one thing joining a couple of tables with a unique identifier, all those rows and columns. Once you get to third and fourth data sets, it becomes very labor intensive. And when those efforts are complete, locked down. So it's very rigid. And if you want to make changes, it becomes an uphill struggle in any organization. In terms of query performance, those complex queries in a relational world, well, the performance really degrades as more joins are made. And what this means is that answers don't come back in a timely manner that is useful to the business, or more often not, they can even just time right out. So with graph databases, relationships are stored as a first-class citizen. And what does this mean? Well, it means you can do that deep link hunting to uncover those hard-to-find patterns. Now, TigerGraph was built as a fully distributed database, natively built for massive parallel processing. And what does this mean? Well, it means it's infinitely scalable, highly performant, and as it horizontally scales, it's well suited for cloud options. So let's look at the in-database graph analytics and machine learning. This is what the analysts are excited about. Now that you've got all of that data and you're ingesting it at a breakneck speed in real time, why would you want to leave the graph world and go back to that conventional world of first-generation graph or relational databases where things move more slowly? Unleash that machine learning on just what it wants, massive volumes of data at a granular level. Then lastly, we have the no code. And really what this means is that we are availing TigerGraph to operational stakeholders. So they're able to tune and adjust their queries without having to depend on valuable developers or technical resources in your organization. I like what Gartner said about TigerGraph when they awarded them Cool Vendor 2020. TigerGraph is cool for its ability to democratize data across the enterprise. So what else about TigerGraph? Okay, so we have the distributed graph database. It's infinitely scalable. And we see organizations like global 10 organizations like United Health Group connecting over 200 disparate sources of data. Now one can apply advanced analytics to that data to get real value. And to do so, in a highly performant manner. So we see organizations like Jaguar Land Rover who have reduced their supply chain planning from 3 weeks to 45 minutes, or China Mobile, who are detecting fraud in real time across over 300 million calls a day. And lastly, the in-graph database machine learning. Again, unleashing your machine learning to massive volumes of data to uncover those hidden patterns of behavior, to address the use cases coming from the business. Now, that could be Customer 360, recommending appropriate products and services, fraud detection, anti-money laundering, etc. So let's look at some of those use cases in the financial services sector. And it's not just banks. We deal with a lot of fintechs. Insurance companies are using our technology for claims fraud processing. And fraud is a big part of our business. So let's look at what we're doing here. Credit card fraud. Yeah, comparing new applicants to potential or known fraudsters within the network. That's a big one. Payment fraud, transactional fraud, so catching fraud as it happens. Credit scoring and risk assessment. The ability to appropriately right-size the risk and provide the accompanying product with the right loan or interest rate, and to do so in real time as well. Anti-money laundering, absolutely. We talked about Customer 360 and appropriately targeting customers with the right product or service. Trade surveillance. Now, this could be internal fraud. It could be to satisfy regulatory compliance demands like BCBS 239. Who touched what? When did they touch it? Where did it go next? A classic graph-shaped problem. Data lineage. So, for the purposes of the rest of this discussion, let's talk about financial crime and particularly fraud. Now, we know that fraud's going up in this time of pandemic, and that there's upwards of 25 billion lost to fraud, and that's payment fraud alone. But we also know that 4 out of 5 transactions are unwarranted. 4 out of 5 blocked transactions are unwarranted, and that's what we call false positives. And those false positives have a profound impact on customer lifetime value. Not only are they lost transactions, but they also have a negative impact on payment sentiment, payment method sentiment. I know, for example, I have a card that I just will not pull out of my wallet anymore when I'm abroad, because for no good reason, transactions get blocked. So how has TigerGraph come onto the scene, a relatively new entrant, this mature landscape of fraud with sophisticated applications and advanced machine learning? There's no shortage of funding, data science, or talent. Well, quite simply, we come in with the data systems. Existing data systems, quite simply, have not kept up with all of those other advancements. And so TigerGraph provides a better supply of data in a more effective, and performant, and elegant manner. So how do our organizations kind of quantify their fraud losses, our customers? Well, and how do we help? Well, fraud losses, we help in reducing them. TigerGraph finds fraudulent patterns buried deep in the data at scale and in real time. And next, we'll look at fraud. We look at fraud costs. We help to dramatically reduce the false positives. And reducing the false positives, we reduce the amount of investigations that need to be made. So being able to provide cases to investigators with a high threshold of confidence that these are more likely to be fraud than before. And then, of course, with the reduction of false positives, you have a much more seamless customer experience, and those transactions that should go through do go through. So what are people doing now? Well, we look at the best practice, the very best practice with existing technology. They're limited in the querying capabilities. They have to dumb down those queries and simplify them to meet that lowest common denominator of a relational database or a first-generation graph world. So what does that mean? Well, they err on the side of caution. So you've got many more false positives and a bumpy ride for the customer. They're detecting fraud kind of after it's happened versus prevention. Sort of, closing the barn doors after the horse is bolted. We talked about the shallow link hunting, traversing across relationships in a relational world that's very rigid and not performance. A lot of data preparation involved as well. Organizations it's a classic sort of 80-20 rule. They're spending 80% of their time preparing the data to then do analysis on it. And we turn that on its head. It's siloed, it's rigid. There's a high cost of ownership, and your machine learning and advanced analytics are suppressed. So with TigerGraph, it's kind of the opposite end of things, or you unleash your querying. It's a much more seamless customer experience. You can do the deep link hunting and ask the complex questions of the data. You're detecting and preventing it as it happens. You've got that ability to do in-database advanced analytics, and it's extremely flexible. If you want to add new sources of data, it's very easy to do. And for that matter, new use cases can be applied to that master data. So you got a low ongoing cost of ownership, and you're feeding your machine learning and your analytics with exactly what it wants, a rich supply of data. So let's look at some examples of fraud, some TigerGraph customer examples. Here's a leading US bank, and they've got, what they're doing here is they're looking to remove fraudsters from their debit and credit card network, quite simply. And so what they've done is they've taken the universal open source algorithms, which are part of our platform, highly customizable and tunable, PageRank and domain, and they've applied them to Graph. And in doing so, they've been able to reduce fraud losses, straight fraud losses, by 35%, equal to roughly 50 million, and further reduce costs by 1.5 million by reducing the false positives. So those investigators are looking at cases that are more likely to be fraudulent. And when we look at the customer lifetime value impact, it's a couple of $100 million per year, those lost transactions. And note, this is a lapse time, 6 weeks. We deal with some of the largest organizations in the world, so we don't underestimate how complex these landscapes can be. But we're quite proud of that time frame. And this one as well, just 2 months. Another large organization, 60 million customers, they're looking at new applicants and comparing them to known fraudsters. And they've similar results, a 30% reduction combined by a 25% reduction in false positives is really increasing their fraud performance. Here's a testimonial from New Day, a consumer finance organization here in the UK. You may know them from Aqua. They also do the Amazon credit card and other co-branded cards. And so one of the reasons why they selected TigerGraph was to give their investigators and those operational stakeholders the autonomy to tune and adjust their queries without having to depend on depend on developers or valuable resources, which also takes time. And of course, the traditional relational databases could not plow through those billions of rows and scale appropriately. So lastly, or almost lastly, TigerGraph is a mature database now. We're deployed in some of the largest organizations in the world, with organizations that have billions of nodes. We're cloud ready, and we've been fully vetted by all the marketplaces: Google, GCP, Microsoft Azure, and AWS. And we also have our own cloud, a fully managed database as a service offering. So with that, I thank you very much and look forward to any questions.